please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Daniel Hynes, Senior Commodity Strategist at ANZ Research, joins us on the phone line from Sydney. Good morning, Daniel. Thank you very much for finding time for us. We have seen Brent now move a little sub 63. With this agreement in place, is all the good news in the price and we should see crude sub 65, you think?
Yeah, I think leading into this agreement, the market was pretty keen to see this agreement reached, and I suspect that sort of outcome, the outcome we've eventually had, was pretty much baked into the price, and I suppose that's why we've seen a rather muted response, at least in terms of price action today after that agreement. But there's certainly some additional benefits that we're seeing come out of the agreement, which we do think investors will look kindly on, and I do think we could certainly see some upside in the next few weeks as a result of that.
Daniel, what is the kind of range we can expect? And we haven't seen any sort of a big sell-on news. This has gone along expected lines, yet the market is pretty much holding. So what is the price range that you are working with now?
Yeah, no, I do think once investors digest, I suppose, the finer details of the new agreement, in particular, the bringing in of Nigeria and Libya into the agreement does provide, I suppose, a fairly strong support level at current levels. So we don't expect to see prices weaken from here, and in fact, I think the obviously added benefit of pushing it right out to the end of 2018 does suggest that the market will get relatively tight in that period. So we could certainly see it a few dollars higher than here in the very short term. But obviously longer term, we do have concerns about what the higher prices will do for US shale.
Okay. When you say higher by a couple of dollars,
you mean 70?
No, I don't think it could reach there at least before the end of the year. But it certainly in early 2018, when we do see the peak sort of demand season return and that tightness really draw down inventories, it's quite possible we could see it in the high 60s or even over 70.
Okay, and for the early part of 2018, when you said things could get really tight, at that time, how much do you think? I mean, does it breach 70 at all? Or are we still going to stay south of that number?
Oh, no, there's every chance that it can breach that level, but certainly on a sustainable basis, I think it might be difficult. We do feel that any length of time above that, we would see a fairly strong reaction from the US shale producers.
Fair enough.
Okay. All right, Daniel, we'll leave it on that note. Thank you very much